Hey there guys, how you doing? Ryan Pringle with the Pringle team of Keller Williams. It is July 1st. We are halfway through the year. Where did it all go? Before you know it, Christmas will be here. This is crazy. So thank you for taking a minute to watch our mid-year market update. Please feel free to hit that like button if you like the information you hear here, and don't forget to subscribe as well if you find the information useful and want more of it. So let's jump right into it. For inventory, housing inventory is still extremely low. This is putting upward pressure on prices, and we have an absorption rate in the San Fernando Valley that's hovering right around 0.53%, which means that if no new properties came on the market, our existing inventory would sell out in 2 weeks. So that is crazy low. For a little bit of a kind of a comparison, to have a balanced market, we would need to be at about 4 to 6 months worth of inventory, and we are at 2 weeks worth of inventory. So still extremely low inventory across the San Fernando Valley, really across LA County and majority of Ventura County as well. So what's funny is when you look at the nationwide numbers, existing home sales in the 500 to 750,000 range was up 122%. The 750 to 1 million range up 178%, and over a million up 245%. What's funny to me about this is it's kind of contrary to what people think, that the lower price stuff sells faster and there's more of it. No, the higher price over a million stuff is what's selling a lot right now, and that's mostly due to the fact that the people that are still able to buy in these markets do really well, and they tend to buy more expensive housing. So that's why we see those numbers. One of the numbers that I personally tend to disagree with a lot of economists on is the inflation number. A lot of economists are saying the inflation that we're seeing is transitory, which means it's temporary in nature, and it's due to supply chain issues, and we'll probably see prices dip back down. I don't know about you guys, but when's the last time you saw somebody raise prices, not lose all their customer base, and then just go, you know what? I think I'll lower prices back down to where they were before. It doesn't happen. We may see some pricing dip a little bit, but it's not going back to where it was as far as pricing on everything from lumber to food to gas to everything. So it's not going down anytime soon, I can tell you that much. So the Fed looks at what's called the personal consumption expenditures, PCE, that's the number they look at. And that number was up just under 0.5% in May, with a year-over-year increase from 3.6% to 3.9%, which is the highest in 13 years for inflation. Now, what's really funny to me is the core PCE, which takes out the volatile, as they say, prices of food and oil, is the number that really the Fed really looks at. They go by core PCE, which doesn't include food and oil, which seems moronic to me because everything else people can live without, but food and oil kind of we all need. So if you look at the core PCE, that number was up 0.5%. The reason these inflation numbers are important is because they're what's going to eventually affect mortgage rates. So as inflation goes up, you're going to see mortgage bonds get more volatile and go down, and then you're going to see eventually mortgage rates go up. Now, I don't think we're going to see a direct correlation, as direct as what should be based on the inflation number, because I think the Fed is going to try to keep holding things down artificially, because I think if they were to jump rates up to where they probably should be, they're afraid that they'd destroy the market, and I don't see them doing that anytime soon. So the good news is I think we'll see lower mortgage rates for the foreseeable future. We may see a slight tick up. We have actually lately, where you're not getting 2.5% anymore. You're closer to 3%. But that number is not going to jump to over 4%, I don't think, anytime soon. So that's good news for buyers out there. And if you haven't refied yet, great news for you on that. So what does this mean for prices? Well, for home prices, we will probably see continued upward pressure. I do feel we're getting at numbers now where some buyers are pulling back and just saying, no, I'm not going to do this anymore. These numbers are crazy. So we might see a slight leveling. As far as a pullback goes, do I think we could use a small correction, a 5 to 7%, 8% correction? Yeah, I do actually. Do I think it's going to happen in the near future? No, not really. I think we'll probably continue to see, at best case scenario for buyers, a leveling by the fourth quarter of the end of the year here, or first quarter of next year. I don't foresee a huge pullback though. So if you're sitting on the fence just waiting for that pullback, you're probably going to be waiting a while. And as I always say, it's never a bad time to buy the right deal. So I personally have even been buying in this market. It's just a matter of finding the right deal, and you can't just jump on anything because a lot of these prices are not good deals. So if you are thinking about buying, reach out to me. I'll give you some strategies that I use, and we can set you on the right path to finding the right deal that's even worth buying now. And more importantly, if you're thinking about selling, you can't go wrong right now. The only thing you can do wrong is overprice. And when I say that, I mean you can't underprice. If you price your property too low, the market will bid it up. So you will get multiple offers, and it'll drive the price. And a lot of times that's a strategy that we're using here, because we price it just a tad under what the market would think is a fair deal, and then we get multiple offers. It creates like a bidding atmosphere, a frenzy, and they drive the price up to where it's probably they're paying more than they should. So if you'd like to talk more about selling, please reach out to us. We'd be happy to help you with that too. And of course, we work with investors all the time. So if you're looking at investing, want to get into investing, fix and flip, or you want to buy and hold, rent, or even a renovate and then buy and hold, please reach out. We would love to help you with any one of these things. If you found any of this information helpful, once again, please hit that like button, and thank you for watching. Feel free to subscribe, and feel free to reach out at any time. You can call me or email me, and I'd be happy to answer any of your questions. Thanks a lot. Take care.